All right, so I'm going to go over the 1040 tax return. The 1040 tax return is your personal tax return filed by HERD. It is broken down into schedules and sections. So this first page will always look the same. It's going to go over your basic information. Right here, it's going to have your name, last name, and social, as well as if you're filing a joint return, it would have your spouse's name, last name, and social as well as your address. It will be marked your filing status in this box right here. And then if you're taking a standard deduction and you're claiming someone on your tax return, you would mark if you are a dependent or your spouse is a dependent, and the names of the dependents based on their first name, last name, social, and relationship to you. So this initial section is just going over your basic information. If we scroll down, this is going to go over the income of your tax return. So right here in 1A, this will include all wages and salaries you received. These are directly tied to your W-2, maybe in 1A. 2B, if we scroll down over here, this is interest income from 1099s, interest forms. This form distinguishes what's taxable versus what's not, as well as dividends. Dividends come from 1099 div. This form distinguishes what is qualified dividend, receiving preferable tax treatment, or ordinary. In this area, if you have IRA, pensions, Social Security benefits, and the taxable amounts. In line 12, this would be if you're taking a standard or itemized deduction, and it'll be then broken down onto Schedule A. Line 13, if you have qualified business income deduction and you qualify, this will also be on Form 8995. You would then add these two numbers together for line 14, and then line 15 is your taxable income. We then go over taxes and credits. So a tax credit is a dollar for dollar reduction of your tax liability, generally after you've calculated your federal taxable income and worked out how much tax you owe. You can subtract the amount of any tax credit for which you are eligible for your tax obligation. So tax credits directly reduce the amount of tax you owe, while tax deductions reduce your taxable income. In this section right here, we have any payments withheld. So if you had federal income tax withheld from a W-2, it'd be on line 25A, from 1099-25B. And then in line 26, this would be all the estimated tax payments paid in 2023. So at the bottom, we would have total tax payments made. In this section right here, if you're receiving a refund from the IRS, this would be listed here, and the total amount being refunded for you. It would say you overpaid in line 34. And then if you have a balance due, it would be on line 37. That would be any balance that needs to be paid to the IRS. Line 38 is if you receive a tax penalty from the IRS for not paying quarterly taxes either on time or underpaying, you would have a tax penalty in line 38. The tax return then be signed by you and the tax preparer. And again, this is going over the initial few pages of your tax return. Now we have Schedule 1. Schedule 1 is additional income and adjustments to income. So Schedule 1 shows the addition and subtractions. As you can see, there's a lot of potential additions like alimony, unemployment, and farm income. We expect you to have business income on line 3. This would be from your Schedule C for a sole prop. And if you're an S Corp, it would be on line 5. Any other income you received listed in the 1099s you uploaded would be listed here as well. And then this section right here mostly will not be filled out due to the line of work you are in. So the total flows onto page 1 of Form 1040 in line 8. And then part 2, these are expenses the IRS allows you to deduct to get your adjusted gross income, your AGI. Common deductions here are the deductible part of self-employment taxes, retirement contributions, penalties on early withdrawal and retirement funds, education expenses, and student loan interest. These are also taken from the documents you uploaded, so if you want these deductions, this is why we ask you share all those documents. So self-employed, a SEP IRA plan, health insurance, if you had a penalty on withdrawal savings, and this section is mostly not filled out as well. And this is section 1. Schedule 1, section 1 and 2. Now we have Schedule 2. Schedule 2 summarizes all the taxes you're paying other than income tax. So self-employment, if you're a sole prop. In this case, we expect self-employment since you run your own business as a sole proprietor. If you're an S-Corp, your business is paying half of the self-employment taxes and the other half is being withheld on your salaries. So Part 2, other taxes. Other taxes here are listed and circumstantial depending on what happened to you during the year. If you had an IRA, Medicare tax, uncollected Social Security, and things like that. And that is Schedule 2. Schedule 3. Schedule 3 lists out credits and payments on your tax return. Part 1 includes all non-refundable credits. So non-refundable credits reduce your tax liability first, since these amounts won't factor into potential tax refund in the end. You can think of this as order of operations in math. Non-refundable credits come first. Most common credits in Part 1 are the educational credits. Line 3. Since most of our customers are lifelong students, other common credits are residential energy credits. Line 5. As well as clean energy credits. If you made green renovations to your house, alternative motor vehicle credit, if you bought an electrical car, stuff like that. Part 2 includes other payments and refundable credits. So if you paid an extension payment, this would be on line 10. All right, now we're going to go over the schedules of the tax return. In Schedule A, this will be itemized deductions that you took. During the tax checklist, this is when you would go over if you're taking the standard or itemized deductions. If you're taking the itemized, these would all be listed here. If you have any medical expenses, taxes you paid to the state and local, interest you paid such as home and mortgage, gifts to charity would be listed in line 1, and other itemized deductions. Line 17 would then be the total at the bottom. Now we would have Schedule B. This would go over interest and ordinary dividends. Ordinary dividends are the total of the dividends reported on 1099 div form. Qualified dividends are all the portion of the total ordinary dividends. These are reported in box 1A on Form 1099 div. So right here, it would be Part 1 would be interest, and Part 2 would be ordinary dividends. Now we're going to go over Schedule C. Schedule C, as a sole proprietor, is your business profit and loss. So right here, we would have, again, the name of your company, your name, social, and EIN number. This would tie directly to your income and herd. So if we pull the profit and loss from your herd account, this would also be matching. This income would show any gross income from W-2s that was listed, as well as your gross profit in line 5. In this section right here, we have any expenses or deductions you took in 2023, such as advertising, car, contract labor, benefits, a mortgage, office expenses, rent or lease, repairs and maintenance, travel, deductible meals, and utilities. All of these together would then be combined to be on line 28. Expenses that didn't fall into the categories listed in page 1 of Schedule C are typed here with descriptions at the bottom. Other expenses. But first, we want to look at the total expenses. It would then show you your net profit or loss on line 31 of your company. If we scroll here, this mostly does not pertain to you due to the line of work you're in. If you have a company registered vehicle, the vehicle info would be right here as well. And any other expenses would be listed in the total amount as well. So again, this is your business profit and loss from your sole prop. This is very important to look at to make sure that all your expenses are categorized and deducted and your name and info matches. Then we have line D. This is long-term capital gains that are long-term capital gains and losses. Long-term capital gain taxes are a tax on profits from the sale of an asset held for more than a year. Long-term capital gains tax rate is 0%, 15%, or 20%, depending on your taxable income and filing status. Long-term capital gain tax rates are generally lower than short-term taxable gains rates. So if we look at the Schedule C, it is split between short and long-term gains. Short-term gains are treated as ordinary income, meaning it's taxes at the income rate you fall in. Meanwhile, long-term gains in Section 2 have a preferable tax treatment. This means you're held into an investment for at least a year before you sold it. Any gains typically have a lower tax rate. The gains are combined, and depending on the blend of short and long-term gain, it will be treated differently. If you had capital losses, you are always limited to a certain amount each year. Any losses carried forward for you in future tax years. We then see in Part 3, this shows a breakdown of how the IRS determines the tax liability of the mixed gains and losses. Now we have Form 8995. This is qualified business income. The IRS gives you an additional deduction for running your own business. The qualified business income deduction is for sole proprietors and S-Corp owners. Depending on your total income and amount made by your business, the form does a calculation for you. You either get 20% of the business income or 20% of your AGI after the standard deduction. Essentially, the IRS doesn't want to give you too much of a deduction that would result in you having $0 in taxable income. Essentially, they still want some money. Generally, this includes, but is not limited to, the deductible part of self-employment tax, self-employed health insurance, and deductions for contributions to qualified retirement plans. The qualified business income deduction allows Section 199A as a pass-through business to claim a tax deduction worth up to 20% of the qualified business income. So this is saying because you own your own business, you get a certain deduction on your income. This will then be listed, your name, your ID, and the income and loss, and the amount you get. Now in 2441, this is going over any child care expenses you have. So this would list the child care provider name, the address, the EIN or SSN, and the amount paid. And any credits you get on the child care expenses would be listed here in Part 2. Part 3 would then show any benefits of the child care expense. And then we have Form 88112. Basically, the IRS gives parents advanced child credits during the year. The credit is actually larger than the IRS larger, and the IRS incentivizes people to file their taxes in order to claim the credit. This schedule is not calculated based on the age of your dependents. Basically, it does calculate based on the age of the dependents. The older they are, the less you get. This credit flows into Schedule 3, Part 2, Form 1040. This credit is likely not relevant since the child care credit was given in advance.